How do I manage my tax rep practice? How do I get transcripts? How do I track what is going on with the IRS with every single one of my client cases? How do we complete the offer forms, the powers of attorney, everything? We use Tax Help software. Tax Help software is the cornerstone of our practice. We use it for its intelligent ordering. Every single night, it will update the transcripts on our clients, so we will see things happen long before those letters even go to the mail. We can then, react. We can let the client know. We can get all the transcripts we need to determine what our client's best options are, when is the debt going to expire, and we can fill in all of the IRS forms and get them filed accurately, the analysis done correctly. If you're interested in giving it a test, go to taxhelpsoftware.com, use promo code TAXREPTRIAL, all one word, all caps. You'll get a free 2-week trial. Again, that's taxhelpsoftware.com, TAXREPTRIAL, all caps, for a free 2-week trial. If you love it and want to buy it, use TAXREP10, capital, all caps, TAXREP10, TAXREP10, all caps, one word. You'll save 10% on your purchase. It will be the engine that runs your tax rep practice, just like it's what we use for ours. All right, everyone, thank you for joining us. Joining me today again, he's back, is Darren Guillot. Darren is the Deputy Commissioner of Small Business Self-Employed Division, in charge of collection and enforcement. Darren, thanks for doing this again. There's a lot going on. People think, well, collection kind of stays the same. It really doesn't. It has been very dynamic, actually for a long time, but especially since 2020. And of course, it's been in the news lately as well. So I appreciate you taking the time to come and update us.
Yeah, my pleasure, Eric, always.
So quickly, just as background, when the whole coronavirus thing started, shutdown started, the IRS, and we've covered this before, but the IRS wanted to try to make it easy for taxpayers who wanted to resolve their issues to do so, came out with IR 2020-248, which made a lot of great changes, right? Extended the short-term installment agreement from 4 months to 6. For the campuses, allowed them to set up sounds like a streamlined agreement, if you will, just an automatic installment agreement, no financials necessary. If they owe $250,000 or less and could full pay within the time remaining on the collection statute, rolling new balances into existing agreements, so you weren't defaulting people and starting all over again. If you don't mind, now that we're coming into the last part of 2022, what is the status of all that? Is that in place? Have you looked at it? Is it going to end anytime soon? Just kind of give us an idea.
Hey, thanks, Eric. And we did do those things because we wanted to help the public. The commissioner challenged us with finding, pulling all the stops. What can we do to help America through these tough times? And you mentioned a number of those things we did on the collection front to make it easier for taxpayers to avoid enforcement, and especially easier to get into some sort of payment arrangement with them. So although those items were established as temporary measures, we have not changed them. We have not turned them off yet. And as you and I talked about in the past, we're not going to change or stop any of this until we have data and we can measure what's happening with them, because we may be, and we are, learning things about these changes where it can help tax administration, and some version of it maybe we want to keep. Maybe it leads us to some other changes we want to make, but we have not stopped those items. So just to give you an example, since November 2020, close to 1 million, over 700,000 of the long-term installment agreements were established, that were established and that were proposed for default were not defaulted. Over 700,000, we simply rolled the existing balance, the new balance into the existing installment agreement and didn't default it. And with regard to the short-term installment agreements, extended from 120 days to 180 days. In FY21, we have a full year figures there. Almost 750,000 of those payment agreements were established. That was a 67% increase over FY 2020. And just in general, our online payment plan transactions, almost 1.5 million, almost 1.5 million. And that was up pre-pandemic. It was 37% higher than pre-pandemic, the online payment transactions that we registered. And here's the good news about those more generous installment plans. And that includes the $250,000 or less for individuals, if they could pay within the life of the statute, when they're in the notice stream. That's extremely important for your audience to understand. We're letting taxpayers name their price in this dollar range without a financial interview. We're trusting them because they're being proactive to some extent. They're acting within the notice stream before the case gets into enforcement, before the case is assigned to the field. So that was intended to be temporary. It still is. We don't know when we'll end it, but I can tell you that looking at the data, it has among the better sustention rates. They're not defaulting. And overall, our installment agreement default rate tends to average annually about 15%, and it was 9% a year ago. And although it's gone up just a tiny bit, it's still only 11%. So given we're being much more generous in the terms to let taxpayers in many cases name their price, we are not seeing the default rate we have historically in the past of 15%. So far through June, latest data we have, the default rate's averaging on all installment agreements about 11%. And those $250,000 installment agreements where a taxpayer owes $250,000 or less, we're seeing that having a very favorable default rate as well, as far as it being low.
Yeah, and that's worth noting that for those folks listening, it's when Darren says you're in the notice stream, meaning you have not been assigned to a revenue officer. Once it gets to a revenue officer, you are back in what we'll call the standard streamline, which is 50,000 or less over 72 months. So it is a matter of being proactive. And honestly, I think, Darren, it is easier for taxpayers because, those standards, the collection standards, the financial standards, can be tough, because it's like, for instance, housing, it's an average of the county. So like here we have Fairfield County, very overall wealthy county. And you have Greenwich and Westport, but you also have the city of Bridgeport, the city of Danbury. So what I find is many taxpayers are really, there's a squeeze on them financially to try to stick within the standard. So by doing the $250 over the collection statute, it's usually a smaller payment. It is easier for them to maintain. So the hope would be you would see less default, but we're also dealing often with people who have been unable to manage their finances, appropriately. So it'll be interesting to see kind of where that goes. On the note, by the way, of levels of service, I might call up the IRS these days, set up an agreement, and never speak to a human being, which I find is fascinating. Can you update us? Because actually, before we get to that, first of all, you've not opened new campuses, but you've opened one new campus and expanded Puerto Rico significantly. Can you update us on that? And then, if you don't mind, what you can tell us about the use of bots and technology to really alleviate a lot of the bottlenecks.
Yeah, sure, I'm happy to. And all of those items you just mentioned, they're interconnected. They're about better serving taxpayers. When you get a notice from the IRS, that's not something any American citizen is looking forward to, but especially if they get one of our notices from collection, it can create some anxiety for a taxpayer. And especially when that notice is warning you of enforcement, if you don't get in touch with us, we want to answer every one of those phone calls, and we just can't. So we've been doing everything we can for years now, but especially since late in 2019, we don't have enough contact representatives in ACS to answer all of the phone calls that are coming in. Right now, we have roughly 2,600 contact representatives in ACS, but we get enough phone call for thousands more than those 2,600. So what are you going to do to address that issue? One of the things we did was to find areas where we could reduce the amount of time on the phone to answer more calls. That was the original place where the installment agreements without a financial statement came from. We found 17 to 21 minutes per call. interviewing taxpayers. And if we could remove that, we could answer tens of thousands more phone calls. That preceded the pandemic by about a month. And it also tended to help people who were struggling. And so it was going to be a 1-year pilot, but we kept it. And we still have it because we're showing that it is effective and it is allowing us to answer more phone calls. Beyond that, we did hire more people. As you mentioned, Puerto Rico. Puerto Rico has, for years now, we've noticed one of the highest potential labor pools as far as applicants for our jobs. And we just didn't have space there. And it kind of coincides with the commissioner's call for us to help underserved communities or lifting communities up. And so we were looking to establish a campus there and hire among that labor pool. And because of the strong support from the commissioner, we went for 2 sites. And I'm happy to say that we have succeeded in meeting our hiring goals as of last month. We will have, by the end of August, when we open the second site in Puerto Rico, we opened the first one already. We've hired the people we need for the second site. They'll be occupying the building next month. By the end of August, we'll have over 800 ACS employees in Puerto Rico alone, making it the single largest ACS site. And nearly all of those employees are bilingual. So that's important to point out here. We want to, beyond helping less served communities, what about people with limited English proficiency? It would take us years to hire hundreds of people who are bilingual in all of our offices on the mainland. But in Puerto Rico, in less than a year, we were able to hire over 800. Almost all of them are bilingual, and they'll be answering phone calls coast to coast in English and Spanish. And that's a big win for us. It's a big win for Puerto Rico, and it's a big win for America's taxpayers who want to get through on the phone line. We also looked at Mississippi. So when you look at economic indicators and underserved communities, the Delta area of Mississippi really sticks out as a place where you got wonderful people who grow up in those communities for generations. They want to stay there. They don't want to leave, but they need jobs in that area. And it's within, 80 miles of our large Memphis campus. So we decided to take a shot at opening our first ever ACS satellite office. And we did that earlier this year. In about 3 months, we went from an approved business case to standing up the first full team in Clarksdale, Mississippi. And so we will look to potentially hiring some more people there and filling out the space in Clarksdale. They may get up to about 50 ACS employees in the Memphis satellite ACS site in Clarksdale, Mississippi at some point next year. But those employees are hired, they're on the phone. Good news is we are seeing an impact on our level of service. Another thing we did in January 2020 was the challenge collection and our technology solutions office within SBSE to build a proof of concept of authenticated voice bots, artificial intelligence that would be able to go into your account, prove you are who you say you are, and establish a payment plan, get transcripts for you, give you a balance due. And we were able to accomplish that through first unauthenticated bots, which rolled out the chat version in December of 2021. And then the first voice bots in English and Spanish rolled out in January of 2022. And then the authenticated version of the bots who can give you a payment plan, those rolled out at 6:45 a.m. on June the 14th of this year. And in just a few weeks, those bots, they're already establishing payment plans, but by the end of this month, they'll be able to give you a transcript. And by the end of the year, they're going to be able to give you a current balance on your account. We're really proud of how successful it's been. And just to give you the latest numbers, since January, the voice bots have answered 5.1 million phone calls, 0 wait time on hold, and they've established 6,900, roughly, installment agreements for taxpayers, resolved their case. It's the first time in the history of this Bureau, going back to 1862, that artificial intelligence has interacted with the taxpayer, securely proven their identity, and established a resolution to their tax case. Now, this is available for taxpayers only who owe $25,000 or less. Okay. But it's important to point out that of balance due taxpayers, 93% of them fall into that category. So we made sure that the bots went live about the same time that we had to issue the CP14. So we delayed by a week or two the CP14, the first balance due statutorily required notice, so that taxpayers who could afford to make payments would at least have an opportunity to call and interact with the IRS without waiting on hold and make their problem go away and solve it. Now, for taxpayers who can't pay or have a more complex issue, they always have had and have the option to speak with a live assister to help them in that regard. And our levels of service have been trending up. Just for the 1 week period last week, it was over 55%. We'd love to see that or higher every week. But on average for a year to date, 33% roughly level of service in collection on our phones. We're really proud of that because we sent 980 employees to Wage and Investment to help with the surge. So just imagine that the very people who answer the phone calls when you get a collection notice, hundreds of them are not at their desk answering the phone. Instead, they're helping go through the backlog of returns, generating the very notices that will create the phone calls. They're not at their desk to answer. And so that's why we
irony there.
It really is. But look, we want to get through that backlog, and we're confident we're going to get there by the end of this year. And so we timed the balance due notices they were helping create to coincide with when the bots went live. And like I said, those are 5.1 million phone calls that had a bot not answered it. Those calls would have been waiting on hold for our live assisters.
Yep. No, absolutely. And speaking of that, by the way, the backlog on those returns, you felt confident by year end, when we spoke about this before, that by year end you would get back to a normal inventory level. Does that still seem like it's going to happen?
Yes, it does. I mean, we have regular conversations. Things can happen that change things. But at this point, at the rate that we're working, wages working, SBs working, everyone, all the IRS divisions that are helping with the surge effort, with the backlog, at this point, it does look like we will be back to a normal operating posture by the end of the year.
All right. Now, you mentioned the CP14, the notices that come out with the balance due. There was just the news that, I guess there were some issues. It was a systemic issue. I guess the practitioners brought to the IRS. Can you comment on that? Like do you know what the systemic issue was that was throwing it off?
That's in the notice that we issued. So I want to say thank you to everybody out there who may have been part of, well, I'd say thank you to practitioners, period, because the 84% rate of compliance in this country doesn't happen just because of what the IRS does. I mean, you're our partners. You help make sure that happens. We could never engage with every American taxpayer the way that we do together with you, the practitioners. And not too long ago, we were having a regular meeting with a group of CPAs who brought to our attention that they had clients, some on the West Coast, some on the East Coast, who were getting balance due notices that didn't reflect payments that they were certain they could prove had been made. And so we promised we'd look into it. And sure enough, there was a systemic issue. Without getting it gets very technical, Eric, but what was happening was if you had a spouse who made a payment electronically on a return, it wasn't cross-referencing and showing up for reasons that are explained in the notice. But we are aware of it. We got a communication out to remind people, look, if you paid your balance in full, you don't need to react to that notice. And if there's penalties or interest that are associated with that anomaly, that will be abated without you having to do anything. We will correct that. And yes, obviously, our IT function is very on top of making sure that they get that corrected so it doesn't happen in the future.
Right. No. Also talking about levels of service, before COVID started, or we'd even heard of this, IRS was doing a lot in the payroll space with, trying to get ahead of the issue, right? We had the FTD early alerts, the EFTPS. It sounded like that kind of got shelved a little bit during the whole COVID issue. I don't know if it was ongoing or not. Can you update us and sort of just where that stands? Because, I mean, it's a great idea. But again, if you're listening and don't know what we're talking about, one of the issues with payroll taxes are employers, they fall behind. So they're not going to file, because if they don't file, government doesn't know. And if the government doesn't know, a revenue officer can't come knocking on their door, file a lien. Don't worry, next quarter will be better. Becomes 3 quarters, becomes 4 quarters. By the time the IRS would catch up with them, it's now exponentially larger. This business probably is not going to pay this back. And so there was an effort to try to determine where depositing was not in line and to get an early alert, right? Let that employer know the IRS is aware of it. And you saw a jump in compliance when that happened. And it was being done on a pilot basis, like 28,000 employers or something like that. Where does that stand today?
Sure, happy to talk about that. So your audience is very astute in this area, so I'm sure they understand why we suspended the federal tax deposit alert program for a period of time during the pandemic. Everything the United States government was doing to help America's employers with flexibility about making their deposits had the effect of making the algorithms used to determine how to generate an alert that maybe you are behind on your deposits less reliable. In fact, it would be an unacceptable number of false positives. So we didn't work the alerts during that time period. But we have gotten to a point where we are comfortable with the data. And so we resumed federal tax deposit alert issuances about the end of June. So we're working them. Are we going to have some federal tax deposit alerts where we visit an employer and it's a false positive? I'm sure we are. The employer will just simply provide us with the information. A revenue officer will certainly understand that there's not a compliance issue. And even aside from the pandemic, FTD alerts are not perfect. There's just a difference between your past depositing and your current depositing and some other anomalies. As you pointed out, we really fine-tune the program because what we don't want is to have to work an employment tax case where we end up having to conduct seizures, levies on bank accounts, businesses make a decision to cease operations, people lose their jobs, and worse, employers could go to jail. I mean, the number one, revenue officers produced a lion's share of the civil referrals to criminal investigation. And the largest portion of those are these employment tax cases. We train our revenue officers and have for several years, and we have a partnership with the Department of Justice called the Egregious Employment Tax Initiative that includes IRS counsel as well. And we identify really egregious employers who are behind. We're working with them. They continue to get further behind. They just won't do the right thing. And how to develop badges of fraud on those cases. Well, I'll tell you, as a revenue officer, Eric, I worked hundreds and hundreds of employer cases. I don't think anybody goes into the business with the thought in their mind, you know what, tomorrow I'm going to be a criminal. They don't. They get behind. They think they'll catch up. I really think their mind is in the right place. They get a great idea about a business. They want to create jobs, but they get caught up in this. And then the next thing you know, it's criminal. So if federal tax deposit alerts, which have been around since 1972, if we could find a way to make them more accurate and get to employers earlier before they owe a balance, before we have any enforcement authority at all because they don't owe any money, and inform them of just how serious this could be for them, for their employees, for their property, their family. I wonder how many would go that far down the road that it would end up being civil enforcement or criminal. And so we started those again. We are working them now, and we believe they will be more accurate. But I promise you and your audience, we have trained our field revenue officers about the law with deferred payments and the flexibilities that employers had on employment taxes. So as they work trust fund penalty investigations and they're looking at responsibility and willfulness, they're trained and they know how to work cases, even with that extra layer of complexity, because we saw it coming and we don't want people to assess the trust fund penalty if they really weren't willful or responsible.
Right. And speaking about that, let's talk about the bad actors. We've talked about trying to make ease of payment, make it easier for taxpayers to get a hold of the IRS. there are bad actors, right? We see them. I know you see them. And one of those areas that you and I had talked about was in the area of the trust funds, that, the company didn't pay the payroll taxes. Often the revenue officer will do the trust fund investigation, right? Try to determine who is responsible. But the IRS, it looks like, was really taking a hard look as to where the money went. In fact, I actually did a column on this for Bloomberg Tax. Can you update us and explain what that is? Like when the RO comes out and they want to do the interview, they're not going to start trying to trace that money.
Yeah, and thank you. I read your article, Eric, and I appreciate you and others in your audience from their blogs, et cetera, for helping us get the word out. So we work a lot of trust fund penalty cases. Many of those taxpayers get into a payment plan. They pay us in full. Maybe they're a hardship. We resolve those cases amenably. When I'm talking about an egregious employment tax case, I'm talking about employers who continue to pyramid payroll taxes after they've met with the revenue officer. And we're talking about serious dollar amounts that affects the national deficit, because 70+% of all the nation's money comes from these trust fund taxes. We pay for Social Security checks from these trust fund taxes. It's a very important source of revenue to the nation and America's taxpayers. So we take it very seriously. And if the trust fund penalty doesn't work, we've got a number of options. There's potentially seizing property that could cause the business to make a decision to cease operations. People lose their job. We have to think about that. There's a suit for injunctive relief. We've been highly successful with those, but there's a limited number that the Department of Justice can take because they only have so many attorneys. And then there's typically a 7202 referral, criminal investigation or false statements with regard to the payroll taxes, willful failure to pay. And criminal investigation, we've got a very high rate of acceptance, and they've got a very high rate of conviction and incarceration on those cases. But even there are only so many special agents, and they work income tax, they work narcotics and all sorts of things. So what happens to the employment tax cases? Perhaps criminal investigation can't take, DOJ can't take for an injunction. Well, one of the things we've never done in my 35 years here at the IRS is trained our revenue officers on how to follow that money, those payroll taxes, and how they were used. Were they truly used for the benefit of the individual person, an officer, an otherwise responsible person, and they didn't report it as income on their tax return? Might that be income tax evasion? Might that be the premise for a civil fraud penalty that we could refer over to examination? And we work closely with counsel and examination and small business self-employed division. And that in fact is something that we can do. And so for over a year now, we have been training our revenue officers on following the money trail of the unpaid payroll taxes. And if they were truly used as income by the responsible persons, and they didn't report it on their 1040 return, they're working closely with the Office of Fraud Enforcement. They're working closely with examination and National Fraud Council on what to do next with those cases. We are actively working those cases right now. So that's something I never did as a revenue officer, but all 2,065 revenue officers across the United States are trained in how to do that now. And they just started to go back out into the field at the end of June. So that is something new that they'll be doing. And while I mentioned, Eric, new things that they're doing, foreign bank accounts. Nothing wrong with people having assets, owning property, or having money overseas. But if you owe us money and we're interviewing you about your ability to pay, be honest about it, because I assure you, I'm not just saying this to get shock and awe. This is real. Since May the 2nd of 2022, collection employees out in the field, revenue officers, have on their case system a FATCA indicator. So there's an indicator on every case if you have foreign assets, bank accounts, et cetera. So if an employee has to follow that, we'll be sure they have the appropriate training, the appropriate approval levels to get the FATCA reports. They know you have or had foreign assets. Please be honest about that. That's all we're asking. And while I'm at it, virtual currency. The Office of Fraud Enforcement just last year managed to get over 500 additional virtual currency licenses for tracing tools for all of the IRS across the divisions. So if you've got cryptocurrency, virtual currency, be honest about it. We probably already know that you have it. There's nothing criminal about owning virtual currency, but if you owe the IRS money, if you're not filing, it's important that you're honest with us when we ask you about the virtual currency or the foreign accounts.
Right. There are a lot of people who, they think of evasion, right? The false return, the bogus deductions. They don't think about evasion of payment, where you provide the false financial, you leave off the assets, which would include foreign assets and virtual currency, which, by the way, are asked for specifically on the forms. Like the offer form specifically asks about virtual currency. I think 1040 now has it across the top of it. So it's being asked for, and they need to understand that. Darren, last topic I definitely want to touch on, the issue of high-income non-filers, people that are earning, not filing. We know TIGTA raised it in the report. We know the commissioner said that it is an enforcement priority. And, people think, well, audit, there aren't that many auditors. But actually, revenue officers and collection actually plays a big role in that. Can you talk about sort of your role in that and what is going on in terms of these non-filers?
I'm happy to. And you've heard a lot in the news lately about how a case gets selected for treatment by the Internal Revenue Service. Let me be clear for collection, and I'll refer to our taxpayers as customers. We don't pick you to be our customer. You pick us by your behavior. When you don't file your tax return, when you file a return and owe money, you have elected to become our customer. You're in what we call a queue. And we've got PhDs, econometricians, statisticians who work in a special, highly technical area of the collection division who are constantly building and updating filters and algorithms to make sure we're delivering the tax law administration in the most efficient and best interest of the United States. And one of those is, how do we treat that taxpayer? Do we only give them a notice? Did we work their case over the phone in ACS? Is it assigned to the field? Is it assigned to a private debt collector? So there are all sorts of factors that get involved in the score, the complexity of a case. And one of those is high income. One of those is a high balance due. Not always the case, but often a person with a very high balance due probably had a high income that led to that. So they have always been a priority. But what we have been doing for the past number of years, for instance, the non-filers. So we have a special project on high income individuals that don't file tax returns. So we've got third-party information. It's not proof, but it's a very good indicator that you received this income of a certain dollar amount that we consider quite a bit of income. You clearly have a filing requirement. And in most cases, it's more than 1 year. And so we've been conducting special sweeps. We send teams of revenue officers into areas around the United States. We have them mapped out. We know where they are. We know their zip code, their address. We know where these taxpayers are. We know a dollar amount of how much income we believe they received. And we've been visiting them, Eric, and many of those taxpayers file their returns and pay in full. Some of them set up payment plans, but believe it or not, some of them are just so egregious that they still refuse to file. They continue to do the wrong thing. And we have already referred a significant number of them to criminal investigation. Those cases have been accepted and they're already being worked in criminal investigation. I believe we've already gotten some convictions on some. So the high def sweeps or high income delinquent filer sweeps will, if it's potentially criminal, lead to what's called Operation Surround Sound, which is a combined effort between the Offices of Fraud Enforcement, field collection, and field examination, where we take a closer look at potential badges of fraud with the high-income non-filers. What is new that we were going to do last year, but because of the pandemic, it's only happening now this year, is we are also doing high-income, high-balance due sweeps. So we are also, and we're going to try to study the data. You know, our algorithms and our filters say this case should be worked here, and here's how productive we think it'll be. We're going to work a larger number of high wealth, high balance due cases this year through sweeps, and we're going to be measuring that data to see maybe there's a filter that can be improved. Maybe we learn that the filters are great the way they are, but we are going to be making sweeps this year of high wealth, high income taxpayers and field collection.
Well, on behalf of taxpaying Americans and somebody who also makes a living doing this, we appreciate that. Darren, thank you. Anything else going on that we haven't covered? We got. It looks like it's going to pass. We have the 80. Looks like finally some real funding for the IRS. And honestly, for those listening, this isn't a political thing. It's you can't do enforcement properly. You can't have people answering the phones. You can't develop the bots. You can't without the proper funding. So when people are always like, cut the budget of the IRS, yeah, that's great. You're the ones who can't get through on the phone. You're the ones who can't get to a human being. So I'm happy to hear that. A lot of it looks like it will be earmarked for enforcement in some way. And the IRS, I know we've talked about this, is always ready. But are there plans going on for that already? I mean, is the IRS already looking at that and sort of planning for when the infusion comes in, where that hiring will be done?
Absolutely. Very intelligent effort, sincere effort to make sure we hire the right way in the best interest of America's taxpayers. So not in collection, not even in the small business self-employed division. There's a special office called IRS Next, and they are charged with whatever hiring numbers that we get, whatever sort of appropriation, where should we hire, which division of IRS, which positions. We all need more personnel. But which ones get the personnel first? Because we've got limited resources, right? So for people to handle hiring, onboarding, background checks, and all that. So who will go first? I can tell you that within the small business self-employed division, I'll speak specifically for collection, and going back years and years, we are always ready to hire insofar as we know where we need personnel the most. So if we get this much hiring, where would you put them? In the field. We know that it's based on where we have customers and not enough people. If we get a higher amount of hiring, where would you put them? We have stepped plans depending on how much hiring, pardon me. We have a graduated plan already thought out of where we would place our hiring if and when we get hiring. And every year, our leaders in collection are constantly reevaluating that, making sure it's current. Do we need people in, just naming a place, do we need people in Des Moines or do we need people in Los Angeles? I mean, who needs it more and how many people? We're ready to go. But there is a very well thought out strategic effort run by the IRS Next office to make sure LB&I, TEGE, the Human Capital Office, our facilities management people, appeals, where are we going to hire first and how many? So yes, that is being planned.
All right. And I'll plug for Connecticut. We could always use more. I'm sure every area can use more, but certainly in Connecticut. So no, listen, Darren, thank you for taking the time. It's great to get the update. I do think we're going to see a lot more enforcement, more resources to the IRS, better use of data, the FATCA indicators, the sweeps. It's all good. It's all good for the taxpayers who do toe the line, who do what they're supposed to do. We're, it's kind of time to get back to business. I mean, not that you haven't been working, trust me, COVID was challenging, but it's good to get back to business and see the IRS get back to business.
Yeah. And Eric, I'll say this for your listeners. Yes, it looks like we may be getting more enforcement hiring, but I want to be very clear. If our personnel engage with you on the phone or we meet you out in the field, enforcement is never our first resort. It's our last. If you work with us and become compliant, we will not take enforcement action. We want to get you back in compliance. That's our number one priority. And enforcement is not something we enjoy doing, but we will do it. And it's a last resort, though. It's not a first resort.
Oh, agreed. Darren, listen, thank you. I'm sure we'll drag you back here shortly as things keep changing, but thanks for taking the time. And everyone listening, if you want to get a hold of Darren, we put the information out how you can reach out to collections. Also, if you're having an issue, certainly reach out to IRS. Local offices, you have taxpayer advocate, you have stakeholder liaison. There's lots of ways to get a hold of someone at the IRS and get problems resolved. The phones are opening up again. Thank you, the bots. And returns are getting processed. So again, we're going to hopefully get back to normal shortly and resolve issues. So listen, thank all of you for listening. Darren, again, thank you for taking the time. And everyone, talk to you next week. Bye-bye.